The 2021 W-4 for an individual who is married, filing separately with 2 kids. And this can also be applicable for a person who is single with 2 kids. Hello, you got Mr.
and Mrs.
Smith. And in this brief video, we told you what we're going to talk about, so let's talk about it.
Yeah, so the very first thing you want to do is go to the IRS.gov. I had a young lady to reach out and say, well, I thought I was supposed to go to my employer and get the W-4 form. Well, your employer is just going to go straight here, IRS.gov. So when you type in the website, it is going to look exactly how it looks on our screen. If you scroll down, you're going to see where it says search forms and instructions. When you go to search forms and instructions, you have to scroll a little bit, but it says Form W-4. It also says employees withholding certificate, and then the related link is tax withholding estimator. That's what you are going to click on, and it is going to bring you to the estimator, you guys. If you are not aware, the W-4 is now a little bit different from years ago when we originally recorded the W-4 video. It does not look the same, and the IRS actually designed this tool called the withholding estimator to make the process much more seamless for you to know if you should expect a refund at the end of the year, and to also give you options of what you can do if you were to get a refund or if you were to owe at the end of the tax period, okay? So let's go ahead and get into it. You're going to read this stuff, but pretty much you can bypass it and go straight to the blue box that says use tax withholding estimator. Now, actually, let's not just skip this because I want to point out some things in bold. When the estimator asks you on what date did your most recent pay period end, write the date of your last paycheck provided in December 2020. Enter the total wages you expect to receive. It tells you what to do. Using your last pay statement. So yes, you do have to have your paycheck available in order to fill out this form. Do you expect to hold this job the entire year? You know, it tells you exactly what to do if you started a new job in 2021. It tells you exactly what to do if you're keeping your job. So make sure you're reading over that, okay? I apologize. Don't bypass that. Read over that so that you know what to do. But then go to the blue box, use the tax withholding estimator, and it's going to bring you to a form that looks like this.
And the power of you having that check stub in front of you is that it overcomes the fear that many people used to have when it came to adjusting this W-4. We used to hear all different types of stories of why people were terrified of it. Some people would fill it out a certain way for 6 months and then flip it back another 6 months. Well, with the estimator, it positions you to be empowered. So I love it. So if you're not familiar with it yet, get used to it. It's definitely beneficial. I'll say that. So the first thing is first, starting with you. They want to know about you. And it says, select the information that best describes how you anticipate filing your 2021 tax return. So it says 105, your filing status. What filing status will you use for your tax return? And if you ever get to a place that you don't understand what the question is, there'll be a question mark just by every question that elaborates on what is going on. We won't click on every question mark, but just to kind of let you know that it guides you through the process. So if you're unsure, hopefully these question marks will provide some clarity. So it lets you know certain things. They even talk about head of household, which we're big on that because head of household is a different scenario. You wanted to touch on that?
Yeah, I wanted to point that out because you said it gives an explanation of what everything is. Head of household is the most misunderstood, you guys. Read this with us. Generally, you may claim head of household filing status on your tax return only if, and they should have put that in bold, you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. So again, you have to be unmarried, so single, and you have to have dependents, whether it's children or other qualifying individuals. That is what makes you a head of household, not being married and the spouse makes more money than their spouse. That does not make you head of household. You have to be unmarried and have dependents.
So that's important. But we'll do another video on that on another time.
Yes.
However, we wanted to highlight that just in case you're wondering, okay, I'm married, filing separately. Should I do head of household? No. If you're married, then the answer is absolute no. So in this case, we told you we were going to do married, filing separately. So we click it, and then it opens up the next question. You can't mess this up. You click, and then it prompts you to do the next thing. May another taxpayer claim you as a dependent on their tax return? No. 2 of 5, dependents. Do you plan to claim dependents on your tax return? Yes, we said they have 2 children, so right here is where we'll elaborate. How many dependents do you anticipate claiming on your tax return this year? So for here, we'll put 2. And you scroll down a little bit, and it gets into the income. Do you or will you hold a job this year with paychecks from which federal income tax is regularly withheld? So in other words, if federal taxes will be coming out of your paycheck, the answer is yes. If that doesn't fit your scenario, then this video is not your situation. However, how many jobs do you expect to hold this year? Include jobs you no longer hold. Basically, that's for the individual who may be filling this out in the middle of the year, and they no longer work a job that they used to work towards the beginning of the year. So they would have to include both jobs because the IRS wants to know where all of your income came from, because this form is based on a full calendar year. But in this case, this person will only have 1 job, so that's what we'll put. 4 or 5, pension. Will you receive income from a pension this year? No, this person is not of age to retire, but of course, if you have any questions, you can hit that question mark, and they will put no in this area. Number 5, check all that apply to you. Other source of income and tax payments. So they want to know if you have other sources of income because they want to make sure it's being taxed. So you see a list of things, and we won't check any of them, but I'll just review them. Will you receive Social Security benefits this year? Will you receive a scholarship or grant that must be counted as income? You will collect unemployment compensation. So if that's you and you're collecting unemployment, then you will check it. Earn net income from self-employment. They want to know about these things, and if you're in question, hit the question mark. Receive investment income such as dividends and interest. We'll put no, but that's not a bad form or way to be compensated. Had taxes withheld or made estimated tax payment for income such as dividends, interest, distributions from an IRA, Roth IRA, 401k plan, or a trust. Have other taxable income such as annuities, alimony, distribution from an IRA, not IRA, Roth IRA, or the 401k or trust. Basically, the IRS wants to know, did you receive any side money?
Yes.
So they can tax it. That's just the nature of the business. But if you understand how that all works, then there's ways that you can still benefit even if you have to check some of these boxes from the taxes that will be taken out of the side income that you may receive. In this case, we won't check any of those things. Demographics. I will be 65 or older on January 1st, 2022. No. I'm blind. No. So we'll hit next because none of those boxes have to be checked. Then it transitions into the income and withholding.
Yes. All right. So now they want to know about your job, you guys, which is why you want to have that paycheck in front of you. It says enter your income and withholding for each job and or pension you will earn income from this year. Each job should be entered separately. The order in which you enter them does not matter. Okay, so let's get into it. Do you expect to hold this job the entire year? Yes. How frequently are you paid? This person is paid bi-weekly, which is the same as every 2 weeks. So we're going to do every 2 weeks. On what date did your most recent pay period end? January 1st, 2021. So they literally, the pay period end at the first of the year. Enter the total wages you expect to receive this year. For this person, $32,000. Enter any bonuses. All right, this person is not receiving any bonuses from their employer. So going down, using your last pay statement, enter the federal income taxes withheld. Well, her very first check shows $84.75 was withheld. Because this is the very first paycheck of the year, we're going to put that in the year-to-date spot and the pay period spot, you guys, only because this is the first check. The second check is going to be different. So if you fill out this form when you receive your second check, then the year-to-date is going to be one number, but for that particular pay period, it's going to be a smaller number. You want to add on to that?
No, that's perfectly said. So just understand that if yours looks different.
All right. Did you or will you contribute to a tax-deferred retirement plan, such as a 401k? For this example, no. Do you or will you contribute to an HSA, FSA, pre-tax child care credit account, or other cafeteria plan? No. If you don't know what that is, hit the question mark. All right, so let's go next.
Adjustments to income. Most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? Now, I will click see adjustments, but they're right. A lot of people don't have enough adjustments to make a significant impact on their tax liability. However, these are some of the things that fall into that category. You may be familiar with the terminology of things that you're able to write off from a standpoint of student loans, educator expenses, deductions, contributions, health savings, moving expenses, alimony, penalty for early withdrawal savings, certain business credit, so this falls into the category when a lot of people used to do certain things such as itemizing their deductions. So if you typically itemize, then you may be able to benefit from this. However, it may not be as beneficial because usually the standard deduction is more than these adjustments to income. We just want you to see it. And basically, what's an adjustment to income? It says you may qualify for certain adjustments which reduce the amount of your taxable income. If you're not sure that you are eligible for any adjustments, select See Adjustments and browse the help tips for the adjustments listed. So if something sounds similar, then by all means check it out and see if you qualify and determine whether or not it will be beneficial for you to claim it. So on this one, we're going to leave that blank. We're going to go to next step, hit next. Deductions from income.
Deductions from income. It says that this individual qualifies for a standard deduction of $12,550. Deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deductions? Marcus, go and break that down for him.
All right, so like we stated, some people can do itemizations, but as it relates to the standard deduction, this is basically a deduction that everybody qualifies for depending on your filing status. So if you're single, you get a certain standard deduction. If you're married, you get a certain standard deduction. If you're head of household, you get a certain standard deduction. So depending on that scenario, this number will look different. So this person, based on the information we input, says you qualify for a standard deduction of $12,550. So if you're itemizing and your itemizations don't total more than the $12,550, then you'll be better off just taking the standard deduction. Otherwise, you'll end up paying more than you have to in taxes. This helps lower your tax liability by claiming the standard deductions. So now here it says deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deductions? Again, if your itemizations do not equate to more than this, $12,550, then just roll with the standard deductions. And if you have any questions, by all means, you can click this and just determine if this fits you. But we pretty much broke that down in a nutshell. And if you click on itemized deductions, you'll see that list again of things that fall under itemized deductions. This is where medical and dental expenses kick in, taxes you paid, qualified interest that you pay, gifts to charity, casualty loss, other itemized deductions, and things of that nature. So on this case, we're going to just take the standard deduction because they won't be filing it. They'll just accept what is available here. That's $12,550, and we'll click next. Then it takes us to the tax credits. Tax credits. So based on your inputs, you qualify for a tax credit for your dependents, and in many cases, that will be you if you have children. In this case, it was 2 children that we're dealing with. Tax credits are the amounts you subtract directly from your tax obligation. Do you want to learn more or finish and get results without tax credits? Most people want to know about those tax credits. Anything that'll keep more money in your pockets might be worth looking into. So we click tax credits, see tax credits, and it says child and dependent related. You stated you have 2 dependents. If this is correct, please return 2, step 1, about you, to update your number of dependents. Child tax credit basically says the calculator will automatically determine the number over 16. Enter the number of qualifying children under age 17. So here we'll put 2, both under the age 17. Child and dependent care tax credit. Select the number of qualifying person. Now, what this is basically somebody who's in child care. So it says child and dependent care tax credit. You may be able to claim the child and dependent care credit if you paid expenses for the care of a qualifying individual to enable you and or your spouse if filing joint return to work or actively look for work. So basically, if you're paying for some type of daycare because you had to go to work, then you will qualify for this. Or if you're paying for a qualifying dependent to have some type of home care, you will qualify for this as long as you're working or actively looking for work. So we will leave that blank on this one. Or, well, on this example, we'll go ahead and put 2. So we'll say the children are young enough to have some type of child care. And if this fits you, then that's perfect. Now, enter an estimate of your work-related child and dependent care expenses. So they want to know what's the number. Qualifying work-related child care expenses. The total expenses that you may use to calculate the credit may not be more than $3,000 for one qualifying individual or $6,000 for 2 or more qualifying individuals. Expenses paid for the care of a qualifying individual are eligible expenses if the primary reason for paying the expense is to assure the individual's well-being and protection. If you receive dependent care benefits that you exclude or deduct from your income, you must subtract the amount of those benefits from the dollar limit that applies to you. I'm going to read that last sentence again. If you receive dependent care benefits that exclude or deduct from your income, you must subtract the amount of those benefits from the dollar limit that applies to you. So basically, if you had assistance that helped cover some of your dependent care, then you must exclude it from the dollar amount that applies to you. Otherwise, it's like you're claiming free money or not reporting something that helps to offset your tax liability. So in this case, they have 2 kids. We'll just put $6,000 just because they said up to $6,000 for 2 children. So we'll just put that number there. Earned income tax credit. Select the number of qualifying children. Since the tax withholding estimator simply provides an estimate based on your inputs, please use the help button for more information. So you're trying to put in the earned income credit. And I won't read this all the way, but many times people qualify for earned income credit if they fall under a certain threshold as it relates to the income that they make in comparison to the amount of qualifying dependents that they have. So I read the first line and basically, well, I dive into it a little bit. It says the EITC, which is the Earned Income Tax Credit, or EIC, Earned Income Credit, is a benefit for working people with low to moderate income. To qualify, you must meet certain requirements and file a tax return, even if you do not owe any tax or are not required to file. The EITC reduces the amount of tax you owe and may give you a refund. We recommend you use the EITC assistant to determine your eligibility for earned income tax credit. A qualifying child is a son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, half-brother, half-sister, or descendant of any of them. For example, your grandchild, niece, nephew, and all of the other things right here to just see, you know, who is a qualifying child. So as you can see, it's more than just your children. It's somebody that you're actually actively taking care of.
It also had age limits there. So if we go back, it says under age 19 at the end of this year and younger than you or your spouse is filing jointly, or under age 24 at the end of this year, a student and younger than you. Okay, so permanently disabled, all of that is included. Also a person who isn't filing a joint return for this year or is filing a joint return for this year only to claim a refund of withheld income tax or estimated tax paid. So all of this, if it does not make sense, you guys, there are blue hyperlinks that explains everything. If you qualify, if you don't qualify. The thing about the earned income tax credit, a lot of the times parents especially, they know if they qualify for the earned income tax credit or not, especially if they just base it on a previous year and they haven't added any children or anything to their family.
Absolutely. And if their income hasn't changed much, in other words, haven't grown drastically than typically you know. So in this case, we'll put earned income tax credit, and we'll say that this person has 2 children that qualify. Why? Because they probably qualified for it last year. Adoption tax credit, we'll leave this blank, and this is basically entering the amount of adoption tax credit for which you expect to be eligible. And this is for someone who has tax benefits for adoption, include both a tax credit for qualified adoption expenses paid to adopt an eligible child and an exclusion from income for employer-provided adoption assistance. So in this case, we'll leave that blank. We won't mess with it. And there are other things that fall under the tax credits in terms of things that people may be eligible for to offset their income based on the tax laws and things that help lower a person's tax liability. So those things fall under the umbrella of foreign tax credit, educational, retirement savings, homeowner benefits, elderly, disabled, business, alternative minimum tax, and energy efficient vehicles. So it's a lot of things in place that can help a person legally pay less in taxes if they tap into them. So a lot of times people, get upset about taxes, but they just want you to do a little bit of doing and homework and participating in order to legally lower your tax liability, because there's quite a few incentives that can help you legally pay less in taxes. Kids is just one of them. Earned income credit is just one of them. As you can see, the list goes on. Click around and see if that may apply to you, but for this scenario, we're just going to hit next. And then it brings us to this page here. And this is what made me really start liking the online version of the tax withholder estimator or calculator. You may hear us reference it as a calculator, because it gives you your results. Many times people used to fill out the W-4 and not know what to expect. Well, in this case, you pretty much know what to expect. So in this case, it says your results based on the information you enter. And they say based on the information you enter, because the more accurate and honest you are with this form, the more honest the results will be to you. So it's important for you to be accurate with it, because it's going to be based on what you enter. If you do not change your withholdings, you are likely to get a refund. So basically, if this person doesn't do anything different, they're likely to get a refund of $2,295, and their anticipated tax obligation is $0. Basically, if they just go about it accordingly, then they won't be obligated to pay any taxes. They'll get an estimated overpayment of $2,295 in the form of a refund.
All right, so now let's look at this adjuster tool, because I honestly started calling the IRS the GOAT when I've seen this. If you don't know what GOAT is, it means greatest of all times, okay? And you never want to say that publicly about the IRS, all right? But they created this cool little adjuster tool, and as you can see, you can literally just slide it, okay? It says, want to adjust your results? Use the slider below to select the approximate refund amount you'd like to get. So they're already telling you here, the maximum refund you're going to receive based on what we put in was $22.95. But let's say you decide, well, I don't want a lump sum at the end or beginning of the year. Let's try to split that up. I'll take $1,100 at the end of the year, which means the other amount I want back in my paycheck. If that's the case, look at what happens here. Oops. Hold on, there we go. Look at what happens. This box pops up. It says for a refund of approximately $1,100, your job annual pre-tax wages being $32,000, to get your desired refund amount, you will need $37 withheld from each paycheck. That's $48 less than your current tax withholdings. Then it shows you how to adjust your withholdings right here. In order for you to get that $1,100 back, this is what you're going to do. You should only be paying $37 each check, which is $48 less. It says check if your employer does this via paper or online. Step 2, complete a new form. Check online or enter paper your personal information. Then it tells you exactly what to put. Select single or married filing separately on line 1C. Enter 1168 for credits and other reductions to annual income, and it tells you what line, you guys. So they're literally telling you step by step what to do. on Form W-4 is already pre-filled. So they're telling you it's already there. If you click that link, the form is already pre-filled for you. All you have to do is print it. This is an annual amount by which to reduce tax withholdings below the standard withholdings that will be withheld from each paycheck for this job if lines 3 through 4C of the form were blank or 0. If using a paper form, also sign it and date it. Step 3, submit this new information to your employer as soon as possible, okay? So it literally just told you exactly what to put on the form. Also, there's a pre-filled form already put together for you that you can just print. All right, so let's play with it a little bit more. Slide it all the way to 0.
So let's assume that this person says, you know what, I don't want a refund at all. And before you get all scared and nervous, because some people do not want to part ways with getting a refund.
Yeah.
It's not a bad thing to break even, and it's not a bad thing to even owe a little bit, because what that does is put more money into your pockets on a month-to-month, check-to-check basis. And in many cases, it helps a person take that extra money and do some good things with it throughout the year, opposed to waiting to the end of the year to get a refund. So it's a strategy, and you definitely want to implement it, you know, with discipline. So I'll just say that. For a refund of approximately $0, based on your inputs and current tax situation, this result is not achievable at the moment. Consider using the estimator early next year for a higher likelihood. So this is the thing. You can adjust it, and then based on your adjustment, you can change it. So right here, the only reason why it's not achievable is because they have already paid something in. On this check, they paid $80+. So
right.
That amount isn't achievable. However, right here, if you put it at 170, you know, due to their scenario, it says, since you have already withheld significantly more than the anticipated tax obligation, this is the smallest possible refund that you could achieve, even if you had nothing more withheld for the remainder of the year. So basically it says right here, to get your desired refund amount, you will need $0 withheld from each paycheck, $85 less than your current tax withholding. So what that means is now they'll, instead of being taxed 84 plus some, or 84 and some change per paycheck, they'll be bringing in $85 per paycheck, which is equivalent to $170 per month.
Yes.
So my question to you is, what could you do with an extra $170 per month if you knew you wouldn't have to owe the IRS? In other words, you wouldn't get a refund, but you wouldn't have to pay in.
That's
what could
good.
you do with an extra $170?
That's good.
Because over the course of the year, you'll get $2,000, but now what if that $2,000 was going towards eliminating debt? What if that $2,000 was going towards saving? What if that $2,000, even better, was going towards investing? How much further would you be when it comes to tax time the following year? Just something to consider. And this W-4 withholding slider allows you to play with it and figure out a scenario that best fits you. And then, like we stated before, you'll be able to fill it out on your form and turn it in to the employer, so that way you can make sure that it's done accordingly. So you just play with that adjuster, and then it'll, you know, give you the scenario, what to expect about the scenario, and just play with it, literally. So we literally went from you getting a refund to you getting half of your money to you getting all of your money, and then you figure it out accordingly, and they help you do it once you put the information in.
All right, so last thing I want to look at, let's move this adjuster all the way to the end. Let's say you keep your refund, you want your $22.95 at the beginning of the following year, or, you know, now at the beginning of the year. So let's say, my bad, I'm going to go back up. Okay, so you see, to get the refund, it says you don't need to make any changes. Nothing at all to your W-4. Keep it as is. But if you want that small one, I'm going to go back here, 170. I want to show you guys what the pre-filled form looks like. So we're going to click that. It's going to pull it up. Because keep in mind, the W-4 looks different than what it used to look like back in the day, okay? This is what the form looks like. And so don't forget, they told you exactly what to put on the form. Now, I don't see that the numbers are here.
And I think
other than this zero.
Just because we manipulated it.
They did put a 0 here. So maybe it didn't upload. But, however, let's go back. It still told you line by line. Let's say it doesn't fill it out for whatever reason. It still tells you line by line.
Where to put it.
Where to put it. This says line 4C, line 1C. You know, it's telling you where to put everything. So still, literally, this tool is doing all of the work for you after you put in your information. So you have to do your due diligence. Just put in your situation. As you can see, as you were going through the form, if anything was confusing, just click the little question mark. Read it and get an understanding of what they're talking about, you guys. And then just scroll on down, and we will wrap this thing up. You see this little chart, and it's just basically a summary showing you everything that you put in. Everything that you put in, and you can literally hit print. So alongside printing out your W-4, turning it into your employer, I always tell people make a copy of it and keep it for your records. Also print out this little chart and keep that for your records as well, so that you can see exactly what you put into this estimator and how it reflected your W-4. All right. Now, to answer also Marcus's question, what could you do with an extra, what was it, $170 per paycheck?
Yes.
Or per month?
Per month, yes.
Guys, what we do, if you don't know by now, we teach financial literacy, okay? We teach financial education. What we tell people all the time, $170 per month coming in, that money could be put into savings to build your emergency fund. That money could be used towards paying off debt. See, most people use that lump sum at the end of the year. Then they say, oh, I'm going to pay down some credit cards. Oh, I'm going to save. Well, you could have been doing that all year long. And let's not even talk about investing, how you could have been investing $100 per month, and the return that you will be getting on those investments will be much greater than a $2,200 refund. So it's not to tell you what to do. It's just to really give you options. You know, we're all about options. If you want that refund at the end of the year, hey, slide that adjuster tool and get that refund at the end of the year. But if you say, no, I want my money now, I want my money every paycheck throughout the year, I need that pay raise, then make sure if you give yourself that pay raise, you're making smart financial decisions with that additional money.
Absolutely. And like she stated, we teach financial literacy and showing people how to use that money to better their scenario. And then even if a person wants to say, you know what, in addition to that, I would like to invest in myself and get a home-based business, there are even more perks that can still position you to get all of your money and still get a refund. But we won't dive in too deep on that. Just want to let you know the options that you have available, how simple it is for you to fill out this form. Share this with somebody that you feel may benefit. And if it's a similar scenario, then hopefully this video still does you some justice if this isn't your exact example. But this is pretty much how it works. 2021 estimator looks very similar to the past year or so. And like she said, the IRS has simplified things, streamlined things, and pretty much made them the GOAT as it relates to the W-4 to minimize and overcome the fears that people had when adjusting this form.
Yes, you guys, we do plan on doing some other examples in the future. Don't rush us, okay? If this particular situation does not apply to you, just answer the questions based on your situation and go from there. We gave you a pretty good just overall breakdown of how the form works so you can go be great.
Absolutely. That's all we got. Mr. and Mrs. Smith.
Signing out.